Yo guys, what's going on? Welcome back to another weekly, well, actually sorry, it's not a weekly, I'm so used to saying the weekly one. Welcome back to another sort of trade breakdown, and I'm going to be breaking down two trades that we took, one on Wednesday, one on Friday, and I wanted to sort of explain to you how I sort of analyzed the trade, how we entered the trade, and what sort of happened, because a lot of the times you may have a certain bias, but sometimes that bias can be flipped very quickly and you have to sort of adapt. That's what being a good trader is, sort of adapting to the market and capitalizing on moves when you sort of see them. And I wanted to quickly show you that because this was a very interesting one on Wednesday where we had an area, a zone that we were monitoring, which was this zone right here. I didn't want price to close below this fair value gap. As you can see, it was respected here at 4 a.m. when price tapped into it at 7 and has rejected it. And if I go to the Telegram, you'll be able to see that at that time, the invalidation was pretty much, here we go. I didn't want price to close below, that's actually the 25th, ignore that, sorry, right here. So there's the same invalidation that I sent on that day. I was anticipating that because price is pushing back up, I'm anticipating price to sort of retrace back into this area. So if we just step through an hour, let's go back. I know we've gone back too far. So this is the invalidation here. So let's get the invalidation. Do I have it on this account? For some reason I do not. It's not resynced my latest things. And then we'll go on to ES as well and do the same thing. So you can see that the invalidation here on both is pretty much the same. So the markets are pretty much in sync at the moment. However, on the left, we do have weekly and daily SMT. So this is something I was keeping an eye on. Knowing that we have this SMT, what we would want to see is that if price closes below this box, then that SMT is now valid and should hold for the rest of this sort of drop down, which makes this a swing high, right? But what I was trying to look for is on market open. What happens on market open? Does price immediately push down on market open at 9:30? If we get that, then this could be a potential market maker buy model where price immediately push down, which is a manipulation, and then we get the distribution pushing back up. However, if the other approach occurs where price pushes up higher, right, and then keeps these sort of SMTs still intact with this daily SMT and the weekly SMT, we could potentially see a short for price to call back into the midnight open and potentially into this POI, right? So that was my two sort of approaches. The reason why I do this is because if you imagine this as your accumulation phase, you would want to see manipulation occur at 9:30. So whether the manipulation pushes down, then you can see distribution higher, or there's two scenarios. Whether you see manipulation higher, you'll see a distribution back lower. So that's what I was going for at this point in time because we are away from the POI. Remember, we don't want to really be buying up here. We want to really buy from our point of interest because this is a respected point of interest. So price could offer discount and push back into this area to then push higher. So let's see what occurs when we drop down to the 30-minute time frame just to show you. It's 8:30. Let's give it another half an hour here, and 9 o'clock opens there. And then what we'll do is we'll probably give it another half an hour. Let's see what happens. Okay, actually, I've gone too far again. I thought that was the whole thing. Right. Half an hour might be too much. Ah, yeah, that's because this is 9:25 already. Okay, so price is already at these highs here, right? And if we look on ES at the same time, we can see that price on ES is already it's above. We are pushing above these highs. So if we sort of skip through 5 minutes and have a look at what's happening on the market open, we see our market open price immediately keeps pushing up, right? So everything is all in sync at the moment, and that daily SMT is still intact. As long as price does not go above this area here, we should see a rejection, right? And we should see some sort of short occur. What I did do is I marked this rejection block right here, right? Notice how when price taps into this area, what occurs. Obviously this is now pushed forward because I'm on the 1 hour. Let's drop back to the 5 minute and see what happens. Notice on the 5 minute, what's happened is that price has not tapped into this rejection block here, right? So we're still going to be waiting, and this is what happens. This is what price does. It wants to manipulate you guys in to the market, and somehow this has gone to 10:33. Ignore this. it's not been updated correctly. Let's switch these off. Right, so notice how at 10:35, 10:37 price is now already pushed down. On the 1 minute time frame, you can see something very clear, where at 8:34 we have an equal low here, we have these engineered lows here, and we have a very clear sell side liquidity right here. As you can see, low, low, and then once 9:30 opened up, which was around here, we pushed high. This is what we want to see. We want to see this whole area not get taken out if we are looking for shorts. So what I'm anticipating here is I'm not liking these highs right here. So I'm waiting because my time of interest has still not begun yet. My time of interest is at 42 onwards, right? I wait 10 minutes to see what the market does with this initial manipulation. This is all manipulation and I do not want to be involved. I want to see what occurs after the 10 minutes up. So if we wait another 5 minutes, sorry, another 2 minutes here, and then what do we see? We see a price currently creating double SMT here, but is this still enough for me to enter? At the moment, we are currently respecting, this is the first presented fair value gap right here. I did mark this on the chart and monitored it, and then I saw at 44 price is starting to push up within this bearish fair value gap. After a few more minutes passed, we did close outside, so I knew that this is not ready yet. This is just all engineering liquidity. So then I'm monitoring this high right here. I'm seeing that is price going to give this a spike, tap into this red box, and then push back below. Let's see what occurs. So then we wait a few more minutes. Remember, our timing is still intact in our macro. So it's between these blue lines right here, from here to here. And you can see that price is still pushing up. We did get a break here. Now it's time to analyze and see what occurs. We got a break and then price immediately created that SMT right at this candle right here at 51, and price is starting to push down. I then note this breaker right here. This is a breaker. Why? Because we have a high, a low, a higher high, and if this candle gets back below 50% of this breaker, I'm very interested in sells right here with the stop loss above that high, trying to attack all of this liquidity down here, right? We've touched the POI as I've been monitoring. We've created that SMT, right? And it's at a key time as well. So time does meet price, and we're waiting for that CST. So this is the CST that I'm waiting for. I'm waiting for price to close back below this red box, pull back in, and then drop, right? So I'm getting ready to see what occurs here. Obviously, yes, you can have stop loss above the breaker, or you can just sort of mark it like this. I can't remember. I think I ended on the 15-second chart, so it was a lot cleaner. There was imbalances and sort of stuff like that. I think I should be on here where I did share it. Yes. So what you'd see is you see price close on the 15-second chart, and there was an imbalance that was inverted. This is a market structure shift pattern, and then we entered with the stop loss above one of the 15-second highs. But I'm going to show you how that looks on the 1 minute time frame. One more thing I want you guys to notice is the time cycle aspect of this. So let me play this first, and then I'm going to show you what occurs. So price tapped back into the first presented fair value gap. However, we closed below the breaker. So any pullbacks inside this should be a shorting opportunity now. And you can see we tapped into there. Did we get another tap in? No, this is where we obviously entered here. So we went short there. Stop loss was above that. That was enough on the 15-second time frame to enter any retracements into this breaker. Stop loss above the breaker should have been okay. And then where are we targeting? We're targeting these lows right here. So let's see what happens there. Price obviously gives us a little pullback. Where does price pull back? Look at this. Look at this delivery right here. Price is closed back below the first presented fair value gap, and it's a reclaimed fair value gap. And what does price do? Pushes back into this. This could be another shorting opportunity right here. Stop loss is above this fair value gap, and then price should immediately draw towards these lows right here. And there we go. At this point, top step went down, and I remember all about it. And you can see, I think it didn't take my take profit. I think did I share it in here? You can see pretty much top step obviously went down. I was like, yeah, take profit got hit. I edited this after the take profit got hit, and there we go, a nice low resistance liquidity run to the lows there, and then that was pretty much it for that trade. And that was a decent trade. With, I say it was like about $800 risk, and then we have a 1 to 3. So you guys can do the math right there. And that was more than enough for that day. So that was a pretty much clean trade. But one thing I did want to let you guys know was the bias was bullish. So why was I selling? And this is exactly why I wanted to make this video, explaining that even if your bias is bullish, if there is clear draws on liquidity towards the sell side, i.e. equal lows, very clear to the eye. Look, I'm not making this up. This is very, very clear sort of price action right here where you can clearly see that it's equal lows. This is engineered low. It didn't go back below this low, did it? It just continued grinding up. 9:30 opened, it stopped right here. Another engineered low. So I can make these drawings right here, here, and then here. And then these are your sell side liquidities. This is what you guys need to look for. But when is the right time to enter? That's the thing, because a lot of people would have went short here and then would have got chopped up. But the thing is, for me, that is very right on our time. This is why I wait for anything after 42. One more thing I did want to mention, just to see if you guys are listening and following here, is notice these boxes are not random. These time cycle boxes that I draw, they're not random. They're on the chart for a reason, and they assist me in my trading, right? Because each of these cycles, the larger cycle is a 90-minute cycle. The sort of cycle from here all around is a 30-minute cycle, and there are 10-minute cycles inside. This stuff assists me knowing what time is doing at that time, and normally look at what occurred at this area here. Notice how price pulled down, and then the next 10-minute cycle opened, and then we created liquidity here. We didn't break any of the last cycles and any of the cycle highs. So notice how this high was there, and then these lows were like this, right? This is internal range liquidity. You can see that price is still internal, trading internally. What happens on the next 10-minute cycle? It's going to be very clear. The next 10-minute cycle opened, 950, immediately took out this high and immediately took out this high. With SMT was created, and now we want to see that price holds above the last 10-minute cycle high, and this is going to be key stuff right here. Look at the last high on the 10-minute cycle. If price is bullish, it will continue like support and resistance and continue higher. But what did price do? Immediately close back below, and then that was where the CSD occurred, and that was where I had my stop loss above that level, because I was sure that, okay, if price is bearish and we're actually really switching now with that SMT, and we should really attack the sell side now, and that's where time aligned with price, and that's where it sort of continued going down. That is a purge and revert model right there, which I do teach on my VIP, and you can see where price purged the prior high and then started attacking lows. As you see, Brox, JME, if you guys are watching this, not watching this video, if you guys are watching them, you would understand this sort of approach where price takes out the prior high and then starts attacking the lows. So that was the trade we took on Wednesday, and then now I'm going to quickly run to what happened on Friday. So Friday we had a pretty tricky, can I do this? Hold on a second. There we go. So Friday what happened is we did have a quite tricky move right here, because the market was pretty much closed throughout the whole of the London session. So we didn't have any levels to sort of analyze, but we do sort of still approach the market the same way, and we understand that order flow is still bullish. So if order flow is still bullish, do we want to keep selling? No, we do not. So what occurs here is, if we just bring the bar back to there, that is the 8 o'clock bar, right? And we did the same thing again, right? We did the same thing again. On the 1 hour time frame, you can see right there, there we go, we drag this across, our bullish PD right there. And then this is my invalidation zone right here. We have a volume void right here, and market opened at 8 o'clock, 8:30 I believe, on NQ, on futures, because of the CME sort of outage, and then we'll come back. Now this is that invalidation zone right here. If price closes back below, we are attacking these lows right here. But if price stays above this zone here, I am going to keep attacking the highs, regardless of the SMT. This is where people fail to understand the SMT. The SMT is just there to tell you that, okay, the market might reverse, but you still need to see that structure change. If the structure is not changing, the SMT is invalid. It's to lure traders into the market to start shorting when the market is clearly long. Okay, so what occurred after is if you drop down to the 30-minute and we just give one more candle here, what you'll see is at 9:15 right here, let's drop down to the 1 minute actually. Yeah, so the market opened, we are in the POI. Market opened, immediately started pushing up and then took out the high. As soon as it took out the high, look what occurred. Price immediately dumped down to the low. I was trying to get in onto this short here because it was the same approach that we had with the whole with the Wednesday trade, where if market 9:30 opens high and pushes up and you get that SMT, then you're likely to be able to catch a short model back towards the open, right? This is manipulation to attract buyers into the market and then absolutely dump the market back down. So when this occurred, this would have been an optimal selling opportunity. However, this wasn't in my timing. My timing started at 42-ish, right here, so 10 minutes after. And you can see after we have a purge of these lows right here, you can see that this 9:30 low was broken. And then price started to inverse this area and push up. And we are in our POI. You may be like, oh, wait, why didn't you go long? I did go long here shortly, but realized it wasn't the best long to go because it was just a bit more aggressive. So once I saw the next candle start closing back above here, there you go, I went long, and then we did kind of catch some ticks right here as price pushed up, and then we started taking partials. But then what happened is that price did push back towards my entry right here and took me out. So that was the trade that we took. But notice how we only have one SMT. And this is something I'm going to drop in here for those who are still watching this video. I look to see double SMT. If we get that double SMT, then we know that the market is about to rip and it's about to go, right? My main target is still bullish. Why? Because on the 1 hour time frame, that we still have not closed below this invalidation level. So we're still bullish, okay? And then if we go back to the 1 minute, what we'll see is we'll see that price is still dancing around this whole area here. We have this is, I believe, where's 32, 1, 2, 3. We have a volume void here, and then we have our first presented fair value gap here. I believe we were using this. I think it looked different. This is because it's MNQ. Normally do my analysis on NQ, but for now, just for this video, I'm gonna let it slide, I guess, for now. Anyway, so we have an external SMT right here. We don't want this low to be invalidated, so now we need to look at internal SMT. So external SMT occurs on the lows, internal SMT will occur something like this or something like this inside the range. When you get that internal SMT, this should be a confirmation that price is about to turn around if the time is right and if we get a change in structure. At the moment for this, we did not get a change in structure and price pushes down lower. Here we have our internal SMT. Is the time the right time? Say that 10 occurred at 10:05. Price inverted this. We did take a long here, and then price attacked this high right there. But notice what occurs after we take the high. We have 90-minute SMT, meaning that ES has taken out this high. And look on the chart on the right side while I mark this right here. Right on this point right here, we are above the high here. We're above the high here and lower than the high here. I am expecting NQ to start turning back around because it's weak. It cannot get back above there. It doesn't mean that it won't go there. It means for now, we are just going to fall back in. So I closed my trade and then look what occurred. Price immediately started pushing back below this level. But watch what happens here. We are in towards our next macro level here, which is at 42. So I'm going to be monitoring what happens as we get towards this time. Remember, it's time, then price. This is what I'm trying to tell you guys. We're chilling above the 9:30 open. What occurs here is that we get that 10-minute SMT on a purge and revert here. Right on the low here, we purged the prior low, prior 10-minute low, and we are failing to close below the last 10-minute cycle, right? So this is the low that I'm watching here, and I'm also watching this fair value gap. So if I'm into this fair value gap, look what will occur on the next candle. We get a big move up. This is now become a balanced price range. You can also look at the left here. We also have an imbalance here. So every time we go through this area with an imbalance, it's a very, very, sort of smooth sailing zone that we where we just absolutely rip through. And then on this, any sort of pullbacks within that time could be a buying opportunity, right? With that SMT at the low. So what we want to see is we want to see if we get anything. So price pushes up, we leave an imbalance. Still pushing up here. And then we start to sort of form that retracement. Here, price pushes back in. We have that SMT internally again. Another 3-minute SMT right there. And then this is where you can potentially go long and your stop loss could be below that low there. Or if you can go aggressive one, your stop loss could be below the SMT low as well. If you want to be aggressive, and your target is where? Back above to that high. So this, at this point here, I went long. And then what occurred is that, yes, we did get a slight spike lower here. I think it was on this candle I went long as price was pushing up here, because this was a break on the 15 seconds. So price should really respect that low there. It's respecting this balanced price range. Notice how price is failing to close in. It's just the wicks that are going through. So we're respecting this. And then it was at this point where I took half on this move here and bought my stop loss to entry. And then what occurred is that price obviously went back down and closed me out at entry. And this was a bit of a interesting move right there for me, because I got closed out at entry way too early. I was protecting capital just because of how sloppy the whole movement from the left was. I just didn't like it. Enter the trade was out, enter the trade was out. So I was just more capital preservation here rather than actually following the model. However, when I looked back 5 minutes later, yeah, that's exactly what happened. Price continued to absolutely rip through towards the target, and then we would have been out of the trade there, and that trade would have worked out. But here we go. This is what it is. This is what trading is all about. And I wanted to share that with you guys. Hope you guys understand and how I sort of analyze the market. I know there's a lot that I'm unpacking there, but you know, it's one of those where you guys go into the charts, you guys sort of mark these up and start looking at where in these time zones that I'm marking out from 10:42 to 11:15 or 9:42 to 10:15. It's that 42-minute mark onwards to the 15-minute mark of the next hour. Look and monitor those macros. You'll see that price tends to expand within those time zones. So that's exactly where you want to really enter when price is ready to expand. And I've shown you proof of that, where price expands and where price expands on this move there. That would have been a smaller time frame move that you could have caught. It's still enough ticks to sort of, how many ticks is that? What is that, 160 ticks, 41 points or whatever. So it's still enough moves to catch, and then yeah, that would have been the whole trade. There was one in the PM session, but I wasn't interested in that. That was my only target for the day, because I am bullish, so I'm targeting prior highs that I engineered to continue higher. And then if you just go for the rest of the day, price immediately went back down and then immediately went back towards that level again. This is exactly how NQ moves. It just fakes, acts like it's not going to go there, pulls back down, and it does the same thing here. Notice on this one, we are monitoring the prior 30-minute low. Okay, look at this red box. Price immediately opens up here at 12:30, right? You break below that low, and then watch what happens after. You went back up to attack the high. Guys, these zones that are marked on my charts, they're not random. And I'm showing you time and time again where a price will break below a prior 30-minute low, and once it gets back above that, it will continue towards the prior 30-minute high. Not all the time, but only when order flow is bullish, then you expect, it's like a prior daily low sweep, right? Imagine this is prior daily low and this is prior daily high. If we take out prior daily low, we'll attack prior daily high, right? If the order flow is bullish. Similar sort of thing on the night, on the 1 hour, 90-minute, sort of 30-minute, 10-minute, same thing. It's just the same thing, just fractalized down. If I go onto the 15-second chart, you will see moves on the 5 seconds, say previous 5-second cycle, right? It will take out the prior 5 seconds and then attack the prior 5-second high. It's exactly how the market is moving. It's just basically algorithmically moving based off prior cycles. And prior to, that's the reference points. These are data points that Algo is potentially using, and you can see that it's using it very, very well. Where price will potentially break through a cycle and know that if it gets back above this cycle, then this is the next data point. This price level is the next data point for price to go and draw towards. Once it breaks above that, it should continue higher and towards the next level, which I haven't analyzed yet. But that's pretty much it. That's what I want to explain in this video. A bit of a longer one, but I just want to sort of explain and break down the trades that we took this week and ready for the new month. So should get some more videos from me going into the next month, because we've got some time to sort of do some trading next month, so that'll be good. And pretty much it. I'll leave it there. Hope you guys watch that and enjoy that video. Any comments, just drop it in the comment section. I'll be sure to reply and explain what I mean by these sort of moves. But one thing just to end, if you guys are still here, right, this whole move that you saw me analyze is essentially a market maker buy model. That's all it was, where price pushed down from this level down to here, and then what did it do after? It grinded back up towards the high. Right, there we go, market maker buy model. Again, a market maker buy model. Why are these market maker buy models occurring? Because order flow is bullish, so you're likely to get market maker buy models because it's bullish. If it's bearish, you're likely to get market maker sell models, right? One thing I also wanted to add on there is if you see a big fast move down, notice that if once you get a big fast move down, look at the price action on the right of it. It's sluggish, it's choppy, it's slow, and it will eventually get there. So don't act like it's going to be a quick move to the high, quick run to the highs. It's a gradual one. Same way when we dropped on this one, we dropped very quick, and then this was a gradual move back up. It's the same thing over and over again. So don't anticipate that we're going to get a quick one back up. Sometimes we do, right? But a lot of the time, this is all just to get more sellers in, and it engineers liquidity. So that's pretty much it. It's been Oasis FX. Peace out.